Well, good morning, folks. How are you? Hope you're doing well. It is a good morning. I'm not hearing myself yet, so just give me a second here. There he is. There he is. The old man. All right. In case you didn't hear me, it is a good morning. Welcome, welcome, welcome. So obviously, Phil did his best to give me a bunch of crap to work with this morning, but it's okay. This is a good practice session. This is good for you to see what drills can do for you. It's like leg day today. Okay, so that way you know going in. What's leg day? It's the day everybody hates when they're going to work out. All right, so just give you the lay of the land here for the housekeeping portion of it today. You're going to see the buttons being pushed today. Okay, I'm going to be entering with the premise that I'm teaching you how you're going to graduate into. Let's assume for a moment that you got to the point where you have tape read, you have watched price action, you've studied, you've looked for models. I'm watching these relative equal highs over here up to consequent correction of that wick. That's how I'm looking for a run there off of yesterday's regular trading hours, previous day's settlement. And there you go. It runs like that. So that you're going to see a lot of these types of little small little drills, little exercises to look for and how to participate in that. Okay. So already I want to know how many of you are excited? How many of you are excited? Some of you are here like, oh, he's gonna lose trades and we're gonna talk about it forever. Okay. Um, I want you to, and there's the consequent encouragement straight to there. Okay. So this type of setup from here to consequent encouragement here. So let me put that on. Do it like that so you can see it. Okay, so there's consequent encouragement. So everything I annotate over here on the 1 minute chart, and we'll go up towards the end of the stream, but I want to just focus on small little fluctuations based on the 1 minute chart and how you can practice using a sub 1 minute chart. That means we're using a 15-second chart. Now, some of you might think, oh my goodness, this is scary. I don't want to do anything with this. Well, if you're looking to get better at overcoming fear, if you're looking for a way to practice entry models, okay, um, today we're going to work with fair value gaps. Tomorrow I'll do order blocks, and then we'll mix it up on Friday. Okay. But the main takeaway is what you're seeing me do today. Please don't take these as trade entries for you to put on your funded accounts. Do not try to copy them for your live account trading. If you're here to do that, I promise you, I'm going to hurt you. Okay. I'm going to hurt you because I'm going to put you in situations where we're going to look at something that may look like anybody else's opinion. It looks like a fair value gap. And I'm going to show you how to weather entry problems. Where do we look for entries in this concepts of mine? How do we implement the demo? Okay, the paper trading account, because I'm not licensed to give you trade advice. Look at the disclaimer, the risk disclaimer in the description of this live stream below it. Very, very important. So we're going to look at how you can go in on a day by day basis in between trades. Okay, if you feel like you want to do something and you've already made profit, the worst thing you can do is go back into the market and trade. Go into demo and practice. Go in and do drills. If you don't feel well, like for instance, I don't feel well. You probably heard it last night in the live stream. What I ate at that Greek restaurant did not agree with me. So um, I'm a little tore up about it. So let's just put it that way. I'm uncomfortable, but I'm gonna endure it for all of you. I said I was gonna be out here, live streaming today. So no excuses. But I want you to think about how, say, for instance, 10 to 15 handles. Okay. So that's a really good, small, low hanging fruit objective to look for when using sub 1 minute timeframes and using the ranges, the liquidity, the inefficiencies, all derived simply from the 1 minute time frame. Now, what we're going to do is we're going to watch the opening like we normally do. And this is where we settled yesterday on regular trading hours. So that's this price right here. Okay. So at 4:14 p.m. Eastern time, that closing price is regular trading hours opening range gap. At the moment, it's settlement, but it can be actually changed to regular trading hours opening range gap low. Okay. And then let's go back in electronic trading hours. Obviously, we're not trying to imply too much in here, but we have a small little gap forming in 9 seconds, 8 seconds. We'll have the opening bell. Okay. So this wick we worked into the upper half here. Relative equal lows there. So there's a minor sell side on the 15-second time frame and over here on the 1 minute chart. You can see them as well. And what you want to do is you want to look for opportunities for you to engage. You're not trying to make money. You're not trying to have a highlight reel for social media. You're just simply looking for something to engage with to get accustomed to the watching price action. Maybe it moves in your favor, maybe it moves against you. You got to get that baseline foundation of experience. And don't be afraid. There's nothing to be afraid of. Watching the midpoint constant encroachment of this wick. See if I can stave that off. Might just run right on down and take those relative equal loads without giving me a gap. I see opening, regular trading hours opening range gap high. Okay, so it's 9:30 opening price. So far, no gaps to work with. So if you have nothing to work on, you sit still. This is all part of it. Knowing what you're looking for. If there's nothing in the chart, don't force it. Get accustomed to seeing your setups, anticipating them, but not trying to get in ahead of them. So right under here is a small little pool of sell side. And we're looking for just a small little 10 handle, 15 handle max, just to get in there and participate in something. All over the place this morning, isn't it? Feels like, come on, boy, step out here. I got something for your ass today. It's all right. It's good. To punish me for last night's Asian session. I'll review that in brief fashion towards the end. If I don't remember to do it during the live stream, like if we get long winded in this one, because I want to end this one at 10:15, so that gives me less than an hour time, and then we'll be good. And if I don't do the review, I'll do it, as part of today's overall review. So they want to give it a little bit more lift. I don't like the fact they left these sell stops in here, even though we came down into this and we have an order block, we have the buy side balance, sell side efficiency. I just I don't see that as something that I would have went long on. So it could revisit this area down here. It's, in other words, this could be just them engineering more sell stops, trying to get people to chase it long. See what happens if we take out this high here. See if there's any give back into the range from a run above this high and then quick sudden movement lower. The way the day is technically already, looking at it from the 1 minute over here, this is a day where you really would not be wanting to do any live trading with real money. But this is perfect conditions for you to practice in, so that way you can get accustomed to looking at difficult high resistance liquidity run conditions. Incorporating those as practice sessions is one of the best things you can do for your development. All right, we have a little bit of a gap here. I'll watch that. So we have a market that has now relative equal highs, and they're high probability because this one's lower than that one. And we had the same scenario on the opposite side of the range with the sell side. Okay. So either one of these could be played. And either way, if I enter on this, it could blow out either side. So it's like bait. And so we're part of an overall bullish move. We've been bullish for the last 7 days, all up close candles. We opened, we traded down, left sell side. We rallied without taking sell side here. And we're inside this smaller inefficiency, which a little too far for me here. Very sloppy. This one here, look at this and see. That's right here. On close, relative equal highs. We opened, traded lower in here. It's going to be very difficult for me to talk about this over the 15-second time frame. I'm just going to have to just do it, and then kind of like between the next one, talk about what I did and why I did it. It's not going to permit me to have a whole lot of discussion points before I can do it. All right, so relative equal highs have been taken. We're pushed up into the high of that wick on the 1 minute charm time frame. So now we're going to see if there's any give back. If it wants to come back inside the range, we have sell side here and here. When you're practicing and looking for setups or entries, let's say that way, not really so much setups, but you're trying to desensitize yourself to take in trades inside of fair value gaps. You're trying to remove the desire of being correct. You don't care about being right. You're not trying to make money. Just like going to the gym, you're going to be doing repetitions, watching when the fair value gap forms, and then entering it, putting a stop loss on, and we're using a 1-for-1 model. Okay, so uh, using 1 micro, whatever I'm looking for in terms of the run or the target off of the fair value gap, 10 minimum, no more than 15. All right, so we have relative equal highs. We create a short-term high, and now we just took out that high. If this is wanting to pull back into the range at all, it would need to do it here. Otherwise, it's probably going to just continue going higher. And 26 300s are the next upside for MNQ using continuous contract. On 1 minute, we don't have anything in terms of an actual fair value gap. Nothing since the opening. We just have a whole lot of ranges sharing their previous candles range. Like all of this in here is back and forth. That's not a low resistance liquidity run condition. So I'm going to take these levels off that wick. It's no longer important for me. Buy side level over there that we had annotated there. You can manage to pull off like 2 or 3 of these types of drills that we're going to do per hour for the length. I'm not going to be here for hours today. Okay. But 15 minutes after 10, we'll close the session, and I'll try my best to put 2 or 3 of them on. And then what you're going to do is use that as a suggestion on how you can practice putting yourself in and getting a baseline. And you're also going to record how you felt too. If you felt scared, if you felt nervous. All right, I want to see it get down below this wick, consequent encroachment. It's already setting up. If it could do that in a closing basis, and don't come back all the way up to this low. And they just did it. I wanted to see room for a gap to be there that I could short into and look for a run into that down there. So it's really, really, really sloppy. But if you hide from these days, like if you don't want to do anything with them, you won't learn how to recognize when the market shifts from what looks like it's low resistance and high probability, where it transitions from that into lesser degree of probability. Right, so we have relative equal highs, high, higher high, folded lower. Wick in here was unable to get it in the consequent encroachment of that. Oh, Phil's keeping fair value gaps off the chart today, isn't he? Come on now. Hmm. All right, so this could be a reclaimed bearish fair value gap. So it would look like this usually when it's drawn on the chart. Watch the 9:30 opening price and this level here. Use the volume imbalance there. I mean, it is really unruly this morning. Want something in this wick and this little portion of that sell side imbalance buy side inefficiency. Ugh. Well, there you go. It's one on one today, me against Phil. If you got the slide, I'm not going to be able to find it because you're going to move it around too fast for me. I know this sounds like me talking to myself, but trust me, there's a guy listening. They don't go for your stops. Yeah, sure they don't. All right, so there's a little bit of sell side still remaining in here. This run here. Above this gap here, above it with the bodies, utilizing that as a potential inversion fair value could challenge that high. Think about how much ground this covered in 15 seconds. Okay, so it moved a good bit just in 15 seconds. Very, very fast market this morning. Not going anywhere really, but it's fast. Unforgiving. You either get in as it's going into a level immediately and gives you really no time to give you any kind of commentary about it. I'm watching this level now, inversion. Giving it a chance to come back down and wick into that 9:30 opening price. It's so close to just inside that the wick and how we're wicking around this morning. It could hit that and then still utilize that as an inversion fair value gap. Yeah, it looks like it's going to run off. Where it's at now, I wouldn't want to see it come back down to that at all. That would be uncomfortable if I was, like, say, if I was already long, coming back down to that, I would not want to be a part of that. So it would need to just start running from here. This is volume of bounce, silver bullet, low. Let's see if we get the 42. There you go. Now, it used this level as an inversion fair value gap. The body stayed out of it, ran up, small little gap in here with the volume and balance, testing to see if it can get to this high here. That's a simple little drill. It's not about being right or wrong. You're in there engaging. The logic is we've already taken a run on sell side here. We ripped through it. We're back above 930 opening price. We have a sell side imbalance, buy side efficiency. We traded above here. The body showed initial support. If it comes down, stops out, it's just one transaction that you have experience with. That's it. It's not about being right or wrong. It's not a trade signal, so please don't copy it. You're just looking at this in a very, very sloppy, unorganized market condition this morning. Practice in these conditions because you will pick up the signatures that cause problematic trading in other instances. And you can't learn that from a book. And you can't listen to a Twitter space by me or someone else lecturing on it. You got to be in here doing it. Look at the 1 minute chart and how really sloppy that is. Very, very, very messy. Very messy. Forcing yourself to engage in these conditions in a demo, in a paper trading account, so that way it can't hurt you. You can't get excited if it works in your favor. It's just a matter of you submitting to an idea and getting the baseline experience from taking it. It's not like a trophy win, and it's not a mortal wound if it doesn't work out in your favor. And you're conditioning yourself to do that while practicing and doing drills. Drills are simply looking for small little participations in price action with no monetary hope of making money and no fear of losing. These are things you're going to do in private. You're not trying to show off to people. You're not trying to, sweet talk your wife or your husband and say, look, this is my proof that I'm going to eventually make money. It's just for you to condition yourself to be a participant in price action using something, some kind of criteria. It doesn't have to be my stuff. Like if you want to use other methodologies, there's nothing wrong with applying the same logic to that as well. In fact, that's the best thing you can do because then what you're going to do is you're going to desensitize yourself to the outcome. If you continuously do this, even when you are profitable and you're consistently using a model that you like, once you've gotten to the point where you're able to find profitability, by continuously working out this muscle of indifference, that means the outcome is not imperative. It's not important. You don't need it to be right. You don't care. None of this matters as an outcome. It's just one transaction. When you start migrating into eventually deciding on your own, if you ever decide to trade with real money and take on real risk, the same things you're going to consider while you're taking these types of trades, the same logic is the outcome is you're indifferent to it. You don't care. It should have stopped out, but it's not running out to stop yet. That should have stopped out. Oh. It's not executing. So for fairness, I'm going to close it because that would have stopped out. That would have absolutely stopped out. So let's keep things germane and honest. Dark came down, stopped out. The body stayed in the upper half. So everything's still a go. This could act as inversion here. So as long as we don't take out these highs, trading back down into this candlestick's low, same scenario. Difference is it could have a little bit more protraction to the upside. quite get it to me yet. That's close to it. Now, I would want to see it continuously run a little bit more because over here, even though it's sloppy, I like to see it try to make a little bit more meaningful run above this instead of just like a small wick like it's done. Very challenging conditions this morning. You practice in these types of settings and you're brand new, being frustrated, don't be. This is what you like. This is leg day. If you can start seeing these types of conditions when you're looking at the chart and you're looking at a chart and you're trying to make money, whether you're using a funded account or if you're looking at trading live. One second. Looking up problematic price action. If that would have been a little bit bigger, I would have been shorting there. It's too small. He's never said that. So I would have rather seen it continuously run once we got above this high, all this in here, coming back inside the range. I'm not interested in that. So this here, we have this small little imbalance there. We can find our way down below it. Let me add that midpoint on that. We have several times we made these little highs in this area here, high, 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 high. If we get below this imbalance there, and then use that as an inversion fair value gap, we could then enter in and try to see if we can return back to the consequent correction of the regular trading hours opening range gap. So it would be like this. That's a friggin' magnet thing. I was trying to use one of the guys told me, he said, if you hold down shift, it'll override the magnet. And it's, I think it's control, not shift. This. So your consequent encroachment, should we use this as an inversion fair value gap? The longer it stays like this, the harder this is going to be for me today. Going below this, once it has a body outside or below that candlestick's high, I'd be willing to take a shot and see if we can get into that regular trading hours opening range gap high again. So fair value is at 930's price, not gap. It's just fair value. We're just ranging in here, not really doing too much. I hope you appreciate me closing that position because I could have let it go to that there, and it would have looked like it panned out, and the stop would have gotten stopped out. But for some reason, sometimes the trading views little paper trading account thing, it just doesn't want to listen. Your limit orders and stuff don't work sometimes. Not a good selling point when one of the largest people that use your stuff is live streaming with it. Got some work to do there, buddy. All right, so we have a gap in here. We traded down. Oh, I would have rather seen it go into that a little bit better. And what we'll do is we'll use consequent encouragement as a stop. Looking for continuation. We don't care about the outcome. So buy side, the fair value gap, trading down into it. You're just trying to put yourself in front of the market and then submitting to what outcome comes. You don't care again. You don't. It's not about making money. It's you're brand new. You haven't been placing orders. You've been tape reading. You just want to participate. And if you're really trying to be good, you want to participate in hard market conditions. When you're doing it in very difficult or choppy, range bound, lethargic, just messy markets, when you participate in them, you actually record things subconsciously in your mind about the difficulty of how price was unable to run a particular way or not. And those are skills you can't learn from a book. I can't talk to you and convince you because of a lecture or a rant. You just got to submit to it, be part of it, basically. And that real world experience will give you things that you can't learn from somebody, not even a mentor. Like you got to be out here doing it. And in the beginning, it's scary. If you have a whole lot of, I guess, expectations heaped on yourself, that's unfortunate. But you end up making yourself feel like you got to do more than what's necessary. In the beginning, you don't know anything. Like you don't know anything at all. So by demanding that it does a whole lot of things, let's see that should have filled too. Trading View, you're dropping the ball today. You're dropping the ball. Let's see if she can run up there one more time. If I was Phil, I'd rake this thing all the way down below 9:30 opening, just because I'm out here doing it. That's, that's what I would do. But you can screenshot that. Like say you're doing it with TradingView and it's glitching. It's not letting your orders fill. Screenshot it so that way you saw that it went there and be content with that. Okay, just like this one here where it went down and stopped out the trade I was in. I'm gonna close it because it's not fair for that not to have been closing. And look at even trying to close it, they won't let it out. There you go. They let me have $3. That's not real. That's fake. You're a scammer, ICT. Yeah, how about it? So the stop didn't let me get stopped out, which should have been a losing position there, and the win didn't limit out, which would have been a positive. So it would have overcome each one. So it's one for one. No matter how you slice it, you're watching it. Okay. I want to short it here with this fair value gap. Midpoint of that would be right about there. I hear somebody arguing like, I wouldn't be doing this right now. I wouldn't be doing anything. Well, then you're not going to be as good as you could be if you force yourself to involve in this type of price action. Now, this looks to me, admittedly, this looks like it wants to just keep trying to stop out those that are trying to go short. Notice what they're doing. They they keep pushing. Well, let me just talk about it over here in a 1 minute chart. 9:30 opening price. We had this high, lower high, so we had relative equal highs. It ran that, then came down, cleaned up some sell side, and then went back above 9:30's opening price. This high had buy side above it. It ran above it. This high had buy side above it. It ran above it. So I would have demanded really, if I was long, I would be wanting to see this run. It shouldn't be stalling like this. It should be just continuously running. And the fact that it's not doing that, that would be a little concerning for me if I was long. So I'd be looking to take some of those positions long off in partials. So like now we have a higher high. There should be no give back at all now. It should just start running. And when the market creates that problematic stutter It doesn't want to run any faster. It just takes out the high by a little bit and doesn't do much after that. That to me is a little bit suspect. So if you'll permit me, I just want to go through MES real quick and see if I can compare. Look at that major decoupling. So E-mini S&P is not where we're at here on NASDAQ. So that's heavy manipulation. MYM, let's see what this hooker's doing. It's completely left the building. Elvis has left the building. Okay. So this is all stop, 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 stop on shorting. MNQ back here. All right. So let's look at this. All right. So we have this small little gap right here, but go to the left. What do you have? Got this big premium wick. So half of that is where we're trading at now. So I'll take that and I'll put a stop at the high and I'll see if I can get a run back down below sell side and back into that gap right here, plus one tick. Again, decoupled markets, absolutely crazy manipulation, no real no continuation. Phil has it right now. My head's on the block. You can run it up here and just rip it higher and bring all the other averages in sync. But it's okay. It's okay if it happens. But you want to participate. You want to be in these things to see what it feels like to be in there. The other averages are lower. This average just keeps taking slightly higher highs, slightly higher highs, slightly higher highs. So if you want to condition yourself to become a false breakout trader, a turtle soup type trader, um, this is the practice that you do. And you have to get in here and just step in front of it. And don't be afraid of it. Just get in there and participate. Let the outcome be whatever it's going to be. You don't care. You're indifferent to it. Participating when the market's hard will make trading in easy market conditions, it's going to be like a cakewalk. It feels so much easier because you've done hard, high resistance liquidity run conditions and you're not carrying over that dependency on being right or I have to make money because you've conditioned yourself doing these drills where you're just practicing. You're just looking for price movement to support an idea or negate an idea and being content with it. Now, let's play devil's advocate and say it runs the stop out. Looking at where the entry was down to the low, this candlestick's low comes in at 57. So it's close to the 15 handle run that we would be looking for. So if it got stopped out, you would cheerlead yourself in your study journal and say it yielded as much as that much on the trade. And then you would record what your drawdown was. And you do this for every single one. I'm sorry. I should have had these on. Trading executions. Sorry about that, folks. I just didn't want to have a whole lot of clutter on the chart. So if you don't mind, I'm going to take them off as you can see them here. We'll put them back on when we close the session out. We only got a couple more minutes left. If you'll permit me, we'll do that review on Asia's example last night. At the end of the day, when I do my 5 o'clock or it might be 4 o'clock today, when I do the review. Now, I would like to see how we have this sell side imbalance, buy side efficiency here, and then we have the did I say that right? Sell side imbalance, buy side efficiency, or SIBI, and then BISI right here. That's a balanced price range. So if it wants to go lower to take that sell side and revisit this gap here, all of these wicks in here are showing that willingness to stave off higher prices. I'd like to see a sharp run below that low right here and then dig into that rejection block there. That would be constructive for the idea that I'm looking at right now. There you go. One little wick down here. So it went down to what looks like consequent encroachment there. So when you see these, okay, when this happens, you want to see the very next candle show a willingness to get down to its midpoint and close below it. You want to see that because otherwise, this is problematic for continuation. Looking at it on the 1 minute chart over here, allow that candlestick the opportunity to do so. You can take the stop, roll it down to a position where if it stops you out, it's not a losing trade. It covers commissions. So painless. So got that sell side, took out the rejection block. You would look at that low and say, okay, this is the 26,050 even level. And from the entry, it yielded as much as, where are we at here? So 72, that's 22 and a quarter. So 22 and a quarter handles of that run. And it didn't get to that objective I was looking for. It didn't take out the sell side, but it did get to the rejection block here and what looks like the consequent encroachment of that wick. Now we're back in an area where it literally could go either direction, but we have a couple more minutes left, so I'll stay with it. When the market's allowed to move, because it's not being permitted to move right now, everything I've entered off of would have yielded 10 to 15 handles easily, just with static volatility, price action, fluctuations in and of itself by itself. No, no demand on a specific model, just normal volatility would yield that. All right. This little gap in here, I'm not going to draw it out, but I'm going to look at that as a potential inversion fair value gap. Stop above the high, and we'll just look for it to get down to that gap. It should have stopped out. That should have stopped out. Okay, there's a real stop out. So again, you're going to measure the length of time that you're in a trade, the drawdown you took. It was a full stop. Did it yield anything at all during the trade at all? You record all of that. Now, watching these types of things happen, especially when you're brand new, it seems counterintuitive. It seems counterproductive. But remember, everything and every other approach to trading, you're going to be doing these same things. You're going to try to use whatever that you're trying to trade with, and you're not going to get what you want from it. You're not going to walk out there on your first day trading, your first week of trading, and start making lots of money. But if you have a way of measuring when the market's difficult versus when it's easy, all the other methodologies out there, I've never been satisfied with an opportunity for them to define what makes their model strong or not. They all have their opinions, but usually it's always attributed to it after the fact or in hindsight. All right, I'm going to see if we can get it one more time in here. Let me take these things off. I didn't want to do that. These little annotations. We'll bring them back. Hmm. Right. I think ES. I think it's going to try to take its high. MNY. We have it's dead. This sucker's drunk. And then we have MNQ. So it wants its high. Started the stream around 21 minutes after 9. So if I go to 10:20, it still puts me underneath an hour. All right. So we had higher high formed. MES. You. You should really start stretching his legs here and running. Shouldn't even return back to this high. Where's the high coming? Hmm. Watch this little gap right here down to this body's or clothes or whatever that is. Hmm. Not about the money, not about the points. And Q. Yes. Hmm. So we witnessed a run above its that six, sorry, its sick sister. So when this was running up, it was below that high, whereas in MNQ was just steady making higher highs. This would need to really show defense on the bulls. Giving up this on the 1 minute chart after we've taken this problematic if you're long. Q. So now because we had MES, it made its higher high on the morning, and it doesn't have to agree exactly with the measurement or magnitude of the run up in M&Q or Nasdaq. The fact that we went to a higher high intraday is all that's necessary. So now if NQ breaks down, that was the leader. So if this one starts to break down and uses that as an inversion fair value gap, remember this is a 1 minute chart gap. Then it could use the run down here, and this can pull back into the range. So Six Sister was allowed to get up to it. Then any sell side can be engaged at that point. The decoupling goes away, basically, is what I'm saying for the near term. MNQ. Excuse me. There's a volume imbalance right there and the consequent encroachment. So both of those levels could be wicked too. You booger. Okay, volume imbalance just shy of consequent encroachment. Don't want to see that. You want to see the bodies stay out of that. Right in here, that'll be the last line of defense. So if we can get through that, like this, closed candle, so it's a BISI inversion, trades to it. As long as it stays outside this upper half, this could be the catalyst to see it roll and fold over and take that. If it takes this high out, then I'm going to close this session and the results are as they are. Very, very challenging morning. Knowing we knew going in, basically, as I was indicating, it's a sloppy, very sloppy market condition. But if it's going to be a sloppy day, and I've already said I was going to come out here and show you how to do drills with it. Drills are not live trading with real money. It's you getting out here and tasting this and feeling what it feels like to be in it. If you're feeling frustrated, like I don't want to do this, or if you're complaining, or if you think the algorithm's changed, it you're trying to run in mud. No matter what you're trading with, it's gonna be hard. Okay, and that's just a reality. You know, everybody that's been trading for a while, what's a while? 2 years, and they've traded with real money. If they're honest, they'll tell you it's not been so easy to get their trades off. It's a lot of slop that we're trading through. All right. Well, it needs to it needs to really rip higher now. And if it can't do that, we're going to be seeing the rest of the day be extremely ugly. So it's now made a higher high again after having a nice little retracement down in. This should go right into 26,300s. If it doesn't, then yeah, it is what it is. I wouldn't want to be participating in it at this point here. We're back inside the range again. That shouldn't be happening. It should be exploding to the upside. If it's bullish, if it's really bullish and it's organic, this isn't going to be a failure swing. But if it is a failure swing, it could drop very fast to take these lows out here. Look how relative equal they are. That's what I'm talking about. That's what it should be doing. That's exactly what it should be doing. Taking that high out, it should have continued and not just stop there, Phil. Keep going with it. Don't be stingy with it. Let's see. Yes, participate in that. Yes. And let's see what this hooker's doing. She's still drunk. Yeah, she's literally laid out on the floor. The MNQ. All right. Hmm. Cle- Go out to a daily real quick. The butt end of this candlestick's open. There'll be a little pause there, but if it can tear into that, we're looking for 360, 355 or thereabouts. 349. Yeah, so 349 visibility on all time frame. Yep. Lots of room up there. Lots of room. Well, we made a higher high with the previous high being a wick. Okay. Whenever I see that, I want to see the bodies of any kind of like a house dropping down inside the range of that wick's high. The consequent encroachment of that halfway point that needs to stay or keep price at this price point right here. That's the consequent encroachment. The wicks can go through it because there's a wick sitting right there. So if you tap the midpoint of that, preferably it shouldn't do it. But a body needs to be protected to this midpoint or higher. As long as it's doing that, continuation is likely. If it puts a body below this, that's problematic for continuation higher. You would have to resolve that in price action. Hush, hush, quiet. Come on, girl, stop. I'm doing something right now. Okay. Now that's not what you want to see there. That doesn't bode well for continuation on the upside. So you return back to the 1 minute chart. You have a gap right here with higher high. Would you stop? These puppies are driving me nuts, trying to get me to pet on them with my left hand, while my right hand is trying to draw an annotation on a chart. All right, so there's your 1 minute bullish fair value gap. If it can fold and go beneath that, we can look for you know the midpoint of that to be a factor. We're using it right now as a bullish fair value gap. Same thing here. It needs to rip and accelerate to the upside. Showing just that right there and meandering around and going sideways, not not good. When I say not good, it would create apprehension for me to participate in it. I want to see like look how all the candlesticks are fuzzy. They're sharing a lot of the previous range of the previous candle. When it's like that, or if we're in these like weird little consolidations that's inside of a wick, you enter time distortion. So you have to wait for that to be resolved. That means it's got to leave it. And I don't care personally upside or downside, but for where it's at right now, it would make more sense for it to continuously go higher. And the fact that it's really reluctant to do so here, it's just it's very difficult to participate in that for me. I'm not gonna participate in it. It could shoot off and go, another 80 handles higher. This much of a premium with this type of consolidation, and now they laid down relative equal lows here. Yeah. So we can take that off now. So it looks like it's been just a dirty session, but just pressing it higher. See if MES met that higher high. Yeah. See if higher high on MES, MNQ. Note the time. We have 9:30 right there. So 9:30's candle, opening price. We dropped down below it, tore up some sell side, went higher, and then just keeps pressing higher, digging in higher. This is the market's caught a buy program where it just wants to keep going higher. We have another 150 handles or so to the upside and potential range. But we're entering that time when that lunch macro could materialize. And everything that's been put in motion here, they could unsettle that a little bit by running some sell side. Obvious near term sell sides here. And given the way that market's booking price this morning, like I wouldn't go all the way back down to, I wouldn't expect that low here where we're at. But we can take that low out there. And then that would be sufficient enough for the macro for lunchtime. They're not letting this thing drop. Wartime scenario. They're going to tell you that the stock market's up. That means the economy's good. There's no inflation, right? See how fuzzy all the candlesticks are in here? Makes it very difficult for me to be like I would like to use inefficiencies part of a day where you don't see a whole lot of this type of stuff in here, where it's all fuzzy right here like that. Not clean. And when you trade on days or when you're tape reading on days when those signatures aren't there and it's just real quick sudden runs and then back into those inefficiencies or back into an order block, you'll notice the difference because you're looking at like this today. You've been there before, basically. All through here. I mean, look at all this. Now you might say, well, it's a 15-second chart. It doesn't change anything. Like you want to see continuity from this is your time frame to do your drills on. Clean price action should be seen on the 1 minute and in your executable time frame. So what if you're using a 15-minute time frame? Say this is your 15-minute time frame over here, and this is your 1 minute time frame. Same thing. You want to see clean price action. You don't want to see shared ranges with the candlesticks. Because if it's sharing the same range that the previous candlesticks are doing or using, In other words, they're staying inside this little consolidation area. If it's doing that, they're not letting the price run freely in expansions. So you're more prone to see a lot of continued consolidations, higher high. Sure, that's happening, but then it pulls back in and it creates these other little small little consolidations that could, in this condition, spike down and run on liquidity. And it can do it in one fell swoop, one wick, and traverse 50, 60 handles. That's why I don't like those types of conditions. When it's clean and you don't have these ranges where the bodies are sharing basically like it looks like a UPC symbol. UPC symbols the barcode thing on anything you purchase. If it's resembling that, I'm a little bit more reluctant to participate in that because it's more likely that they'll run through that just to get the liquidity that's on the other side of it. In other words, that sell side. So it can run higher on days like this, and I'm okay with letting it go because it has to make sense. Some of you might be watching this saying, "Well, I would have done this," or maybe you're paper trading and you're gonna say, "This is what I did." That's fine. That's good. But I'm telling you what I'm doing as an educator, telling you what you should be looking for, what it's going to feel like while you're trading in these conditions with these concepts, and how I personally use them when it's unfolding like this. If there's a time when I'm going to be reluctant to do anything, wouldn't it make sense for me to tell you when those conditions are in play? If I didn't do that, it would be incomplete experience learning. That would be me holding something back from you. And these are the most advantageous things to learn. We started the stream off with this is a day where you wouldn't be trading, but I forced myself out here to do it. I'm not apologizing. I'm not making excuses or anything because I want you to feel what this feels like. Because if you don't do this, if you don't have it in your own hands, this experience of seeing the uncertainty, the problematic deliveries, in this case, trading view, not letting your orders fill, that could turn into a tilt scenario, make you go in there and want to, you know, exact your revenge on the marketplace. So we have a lower high in here. So we'll see if this wants to roll over and take out that low on the 1 minute time frame. That could set the stage for the lunch macro retracement into the range from 930's opening. We're not trying to force a short. We're not ignoring the fact that it could continuously go higher. In fact, that's predominantly what it should be doing. I told you all-time highs or the daily relative equal highs. That's where I think the market's going to go. But for drills, for you to participate in the marketplace, getting in here, doing something when you don't have a model yet, practicing, putting yourself out there. If you never felt what it feels like to be in with an expectation of what you think price should do, then you don't really have a baseline to start with, and you have to have it. In the beginning, you want to be able to come out here in your mind. You're thinking, I want to come out on my first day trying to do this, it working in my hands. And that's a little unrealistic because that's assuming that you know everything because it's your first day. And that's not practical and that's not realistic. And by recording a scenario like we're in today and getting the data and the information from it, your participation in it, the feedback that it gives you, it's going to be personal. Everybody's going to have a different viewpoint on what they engaged with today. Most of you, if you're brand new, you're going to feel like this was not fruitful at all, and you're gonna want to do something else. If you think that, the best thing you can do for yourself is leave my community. Okay, that's the best thing you can do because I'm going to challenge you. I'm gonna force you to make hard decisions, and you're going to be really uncomfortable because you want to be spoon fed signals. And I told you, don't follow me today. Don't follow me with your trades. But watching price action and participating when there's something to engage with, when there's something to do, then you participate in it. and you take away from that transaction whatever experience is afforded to you. All right. So we have a run below that low. Lunchtime macro is ripping and roaring already. Well, again, explaining that it can happen and not being able to put it on is two different things. I guess that's a really good illustration of what I'm referring to. Seeing things potentially there, and because you didn't participate in it, because you didn't get anything off, you didn't have your release. Okay. Measure your sense of frustration if it's there. If you're indifferent, that's exactly what you're aiming for. All right. So we have this, that 1 minute over here. We're going to see if this can act as an inversion fair value gap, because if it can, it could run back down into this gap. So since I went over time, we'll try and see if we can do something with it. Okay. Managing your emotions and that feeling of euphoria, that fear, that greed, needing to be right. This is where you master that. And it's uncomfortable in the beginning. It's very uncomfortable. Progress is done by removing things that are not necessary. In the beginning, you hold on to a lot of things that are not necessary, but you think they're beneficial. You think they're helpful. You think you know how you should be taught. And that's assuming you know what the subject matter is. So if you know how you're supposed to be taught, teach yourself. Go through all the problems, fall into all the pit holes, go through all of the slow, arduous tasks of doing like I did, finding lots of short-term failures. And if you have the wherewithal to be able to convince yourself to continue, good. But most people wouldn't. And that's the benefit of having a mentor. But if you think that you know how you're supposed to be taught, and this is the right way and that's the wrong way, that's very, very arrogant of you as a student to anything and anyone. You're the teacher. So be the teacher. Teach yourself and be I guess accept and be willing to accept a lot of short-term failure and adversity, because you're not going to know any better when you go into times where it doesn't feel like it's making any sense. The mentor would be reminding you this is normal if you feel this. This is normal if you didn't do this right now. If you didn't see this in the price action, it's normal for you to feel that right now. That's the benefit of having a mentor. But if you're going to self teach yourself, you're asking for an Olympic level feat to be accomplished in your own hands while being ignorant to what it is you're trying to learn. So, that choice is yours. It's always there, but it's a whole lot less pain when you sit with somebody and they explain to you, this is what we're going to look at today. And none of this is supposed to make you money. It's supposed to reveal what your character flaws are. When you put a trade on, what's the first thing you're thinking? What happens if this is wrong? That's what you're doing. You're thinking, what happens if this is wrong? What happens if an ICT comes out here and he puts on these trades, and ignore the fact that I said that we're doing drills, ignoring that. You're going to key up on the fact that there was a button push today. And I told you, don't follow me. I'll hurt you. You need to feel what that feels like. And some of you are trying to feel for me. You're placing your emotions in me because I don't have any emotion about this. I have zero emotion. I'm not embarrassed. I'm not scared. I'm not anything. I'm showing you what it's going to be like for you when you're brand new and you're out here trying to do something. This is pantomiming. Okay. But I'm forcing myself in a condition where the market is literally difficult. This is a 9 day out of 10, 10 being extremely hard. Today's a 9 day. And I'm equating that to not me. I'm equating that to you as a new student. So if you're looking at this market today and you're feeling a little disjointed, it's normal. Now this should really run higher. It should like really, really run higher. So we accomplished the lunch macro down here. It fulfilled all that business. Sell side under here. Come on. There you go. And then we'll look for the relative equal highs here. What's it, 32? So we'll look for 30, 34. That's good enough. So it's this gap I'm participating in. We had a stop hunt, relative equal lows. We ripped through this buy side and balance, sell side inefficiency. We ripped through it, traded higher. Relative equal highs are there. Fair value gap prior to this going, if it can take these highs out, rather. The structure on the 1 minute looks good because we had the small little separation there. We traded down into that. That's this over here on the 15-second time frame. You guys have seasonal allergies? Because mine are kicking in. I apologize if you hear me clearing my throat more times than you're probably used to hearing. Stuff like that gets on my nerves too. If I'm listening to somebody, or if I listen to someone that's an audiobook narrator, if they're a terrible narrator because they either have a head cold or just got over one, or they just do something that drives me nuts, I start listening to the thing that doesn't make me feel good listening to them. It drives me nuts. So I have to endure the book instead of enjoying it. When somebody's got allergies like I'm going through, if I hear that in myself, I get self-conscious because I know I'm very judgmental and critical of people if I'm listening to an audiobook and they're wrestling with something. So just know that if you feel that way, I feel for you. It's not intentional. Now, if you're looking at the relative equal highs here, we're so close to those being taken. When it's a scenario like this, if it goes up there, because it could fail, okay? I can have it wrong. If it can go through these highs, we don't want to see it just do a small little run above it in shallow format and then go lower. We don't want to see that. We want to see it go above them and accelerate to the upside because the market has already drifted lower and taken that sell side there. So stops have been trailed below these short-term lows, like over here on that 1 minute chart. They've been trailed. So they've done enough damage to take those out. So just to take a run above these relative equal highs here, like going above it and then coming back down, that's more indicative of an intraday reversal or a deeper retracement. So it wouldn't make sense to see that happen unless it's doing that very thing, reversing or going lower, significantly lower. So the stop hunt's there when it's when you're in close proximity to relative equal highs like that. You want to see it when it trades through it. You want to see it go through it, to it, and through it. That's the expression I like to use. To it and through it. So we would want to see it go above them and then expand aggressively to the upside, not this shallow little peak above it. And or if it rolls down and stops out and takes out that low here, then I'm not interested at all for the rest of the day. I wouldn't touch it anymore after that. Hopefully, I communicated what I was trying to say there. I just got up and got a bottle of water, so I'm not sure if that communicated as well as I wanted it to. But just again, to reiterate it, these highs being equal like that, and we're just sitting right below it, any movement above it should see continuation. Because if it goes above it here a little bit and then comes right back in the range, they'll run for that low there and lower. This would be the false breakout for the day. Bulls chasing it, and they would take them, run them against the coals, drag them across the coals of the fires, basically, is what I'm saying. And you want to put yourself in these scenarios and feel what it feels like to be in that. So you'll understand when I'm talking about certain things in like rants, or I'll say things in conceptual terms without necessarily doing it in the chart. You'll know what I'm referring to because you've done that before. You've put yourself in a situation where, yeah, there's a fair value gap right there. Yeah, there's relative equal highs right there. Those things are true, but it needs to behave a certain way. It needs to do something that makes sense based on what it has recently done, where it's taken that low out here, it's dropped down, took that sell side out, leaving these relative equal highs. So by having that drop down, it's done enough work for taking out stop losses that's been trailed. And now we see that we went above it, it expanded up to the limit order. Put that aside for a moment. I would still want more follow through. And that's how you would do it. You would put your toe in the water, test it by doing that little drill like that, where you're not trying to demand that you're right. You're not looking for perfection. It's not about the money, okay? You're not looking for a highlight reel example to go over there and show your executions and post it to me or post it to somebody else on social media. You got the transaction done. It went to your little drill target. That's your reward. That's your little cookie because the child in you that's developing into that student that's going to be a consistently profitable trader in the future, they need to be encouraged along the way. And these types of drills help do that very thing. But get that out of the way. Now you got your little cookie, okay? Now you got your yellow belt. You're no longer a white belt, so now you have a yellow belt. So that yellow belt, that experience that you carry forward as a yellow belt, you want to see now that it's done that run above these relative equal highs. Yes, it hit my target for the drill, but is it willing to continue? Is it willing to extrapolate to the upside and continue moving higher? That's the next stage where, again, you're looking for feedback, but you're not necessarily participating where you are making money or losing money, not even in a demo. And you're getting experience that you can't purchase. You can't buy it from a mentor. You can't get it free from a mentor. You got to be out here doing these types of things. In the beginning, it feels like you're fumbling. It feels like it doesn't make any sense. You have no idea what you're doing. But keep doing it each day and put yourself in situations where, okay, I see a scenario where there's a fair value gap here and there's relative equal highs here. There isn't all that much range, but we did get this big stop out. So that means if it does take out these highs, it should have at least half of this range here. It should see that move above it. What does that look like? It's old eyes. Okay. So half of this range. So look at this purple line here. That's consequent encroachment, or not consequent encroachment. I'm sorry. Equilibrium. From that high down to that low, equilibrium is here. So if we measure that to that high, that range, put your fingers, okay, don't touch your screen. That would piss me off if you touch my screens. But try to get a visual representation of this level to that high and then add it to that high. That's this level here. Okay. So what I was saying in terms of when we went above these relative equal highs, even though that fair value gap was there, yes, it panned out. Yes, it yielded positive outcome. Wonderful. Go to the next setup. At least half of this leg lower, once it moves above here, that's a target that you can continuously do by taking half that drop down on that stop hunt, project that higher. And what this will do is it'll give you algorithmic price levels to reach for. They're new thresholds. That's all it is. And if the market fails to go here and reverses, that's indicative of weakness. And that would set the stage for lower prices going all the way into 1:30 in the afternoon. So it's a matter of looking at things like this, measuring the willingness to participate on the part of price action, not you. Is price showing you, like right now, what does it look like to you? Does it look like it's wanting to run up to that level? All we did was take another slightly higher high, and then we're wilted. We went lower. These are all warning signs. They're like canaries in the coal mine, as I was referring to in the most recent Twitter space. We don't want to see these things. Can the market correct it and overcome that? Yes, but we don't generally want to see those types of things. These are conditions that cause the market to force you to babysit the position more times than you should. In low resistance liquidity run conditions, when the market's allowed to trade freely and move around and gyrate and give wonderful opportunities multiple times in an hour, you won't see these types of things that require you to babysit it. You won't have to worry about jamming your stop loss up. That's the benefit of learning low resistance liquidity run conditions. This is not low resistance liquidity run conditions. It's high resistance liquidity run conditions because the market's sharing a lot of the previous ranges, and it's very infrequent when it creates the imbalances. We want to see a market that's fast and loose, lots of inefficiencies, open traffic, all lanes of traffic open, not rush hour. Okay. And when all the candles are all parked next to each other, it's like you trying to go northbound or southbound on interstates. And it's frustrating. You want to have your lane in front of you wide open. And you'll see what you're looking for as a trader, those conditions, and you can highlight them and recognize them in the beginning, rather simple strategies of what I'm teaching. But when we started the day off, right away, I told you like, it's going to be one of those days. It's going to be like leg day. And you want to practice in these conditions. If you're brand new, don't look at that and say, "That's not what he teaches. I don't want to participate in that." Because what you're doing is you're keeping the experiences that you're going to find that you're going to get that experience when you're trading with real money or when it can hurt you. You want to get it in the beginning where it's reasonable for you to do it wrong. It's reasonable for you to feel like you're floundering and not doing so well because it's normal. Would you expect your 1-year-old to be able to get on a bicycle and ride around on it without training wheels? Of course you would not. That'd be unrealistic. So by having these unrealistic expectations in the beginning, there you go. It trades right to the half of that stop hunt right there. Okay. So it was able to overcome it, but we don't want to see that generally because in a low resistance liquidity run condition, you won't have these little hiccups. It'll just run right on up there. So when you guys see me doing all these shorts and I'm selling short at the highs of sessions and whatnot, um, a lot of the times I'm doing what you just watched me do here. How did you know that it was going to do that? And why would you feel comfortable shorting there? And what did you use here? And what did you use there? All the things I'm talking about right now. But a lot of you don't want to listen to me. You just want me to come out here and do trades for so you can copy me, make your money, and then go and pretend like you did it on your own. That's what you really want. You don't want to learn. You don't want to sit here and go through what is required. You want all the fruits and the benefits of taking a trade off of ICT and let it be the good ones. And you're going to tell your friends and your family that you did that all by yourself and you're going to live vicariously through me, like some of these people do, because I'm not putting watermarks on my examples anymore. I'm baiting everybody because you're going to see my stuff in other people's social media. You can see them asking all the time, "Can you tell me what your settings are, your colors?" Because they want to be able to talk about the market when it's not in a trade. So it looks like it was, oh yeah, they did that trade because it looks like their chart too. And I'm hip to all that stuff, dude. That's how it is. It's fraud city on this place. But anyway, back to the lecture. Okay, we're in college today. Um, Drills, labs, you know, they're not fun when you don't know what you're doing. But when you do this consistently every day, have some session, allot yourself, at least 15 minutes each day. It's like doing the treadmill for about 20 minutes a day. I don't do that, but having some routine time where you go in and you participate in price action. and you practice. I'm going to tell you something that many of you aren't going to agree with. You're going to think that they don't do it, but I'm going to tell you they do. Everybody that is profitable, everyone that is profitable, they always practice still outside of their account. That's the truth. Ask anybody that's consistently profitable, and they prove it to you. Not, yeah, bro, I'm profitable. I got my model. I'm doing this, I'm doing that. But you never see them execute. You never see them using it. You never see that. But they got a lot of story. The people that have proven themselves profitable, ask them candidly. Say, listen, is it normal for me to practice outside of my live account, even though I'm profitable? Do you ever spend any time doing that? If they're profitable and they're not a one hit wonder, and they have a skill set that they've acquired over time doing it, making real money, I will bet you that the large degree of the sample set that you ask that are profitable, they'll tell you yes. That's not a coincidence. That's not a coincidence because they're constantly keeping their edge, their refined edge, honed, practicing it. You do not keep your edge sharp and razor edge by constantly going out there and risking your money. Knowing when to put your capital at work by participating in days like this, looking for very specific things. Look where that reversed. Relative equal lows here. There's sell side below that. What's up here except for what I just talked about? There's no algorithm. You have to get in these situations and practice it, okay? It's not enough for me to talk about it or show examples in recordings or even in lectures over live price action. Like, you only get so much experience from doing that, which is you're spectating. But you're trying to be a speculator. You're trying to speculate in these markets. You have to have participation. It's not like Netflix and chill, okay? And I said it before, it's ICT videos and work your ass off on your own time, getting into the charts and practicing. Practicing. When you don't want to, you practice. You have to put yourself in front of the charts. And it's like leg day. We all know if we're going to be realistically taking care of our health and exercising, we have to exercise our legs. But nobody really wants to do it because it hurts the day after and worse the second day after if you're really exercising them. But you only need to do it one time a week. You don't need to anything more than that for leg day is overtraining unless you're chemically dependent on growth, and you can figure what I mean by that. So that's good. They didn't take the sell side and they ran for the buy side. So that's continuation. Signature, it's good to see that type of thing. Let's take a quick look at ES. Okay, same scenario. What we were looking at for NQ. Now you can run that same drill here on on ES. So we'll do ES over here. Same scenario. We just went into the gap here. So the buy side is over here. So watch this high. It should run up. It shouldn't take out the low of that volume imbalance right there. So it should run up, take the buy side there. I'm not gonna enter on that. I'm just telling you you watch it. Just observe it. And it would be a example of sick sister. When I say sick sister, it's this. In case you're brand new, what I'm saying is sick sister. Okay, so when one market's weak and it's closely correlated to another market like ES and NASDAQ, they're very strongly correlated. They're positively correlated. When one goes up, generally, you would expect the other to follow suit and go higher. Here, right now, ES is the sick sister. And NASDAQ is kind of encouraging the sick one to hang in there. You'll get better. Just keep going to work. Keep going to the doctor. Keep taking your medicine. That type of thing. It's really hard for me to find an analogy on the whim right now, but that's probably not the best one I've had in the past. But it's just you would expect this one to eventually come to the same agreement where it made a higher high on NASDAQ. You would want to see that same thing happen in this one here. If it doesn't do that, that shows a break in correlation. And the time of day is about appropriate because we're entering very close to the lunchtime. So we have that 2 hour lunch period where it would be better if it took out that high. And then any retracements would still be viewed as healthy during those 2 hours of 11:30 to 1:30 Eastern time. It's gonna be a short session. Oh man, keep falling for it, don't you? This guy always says he's going to have a short video. Oh man, the comments are so fun. All right, let's see what we can do here. Now again, don't be afraid of the 15-second time frame. Use it as a tool. Okay, all you're doing is looking for the same thing. Like if I didn't tell you what market this was, and I showed you this time frame here, and I talked about it as if it was a specific time frame, um, not 15-second, obviously. Like it could be like an hourly chart, something to that effect. You would pay it no mind. You just go along with, okay, what is he pointing out? What should it do based on that? That's how you're supposed to be when reading price action. You are indifferent to the time frame because price is price. Everything you see this 1 minute chart doing over here, that's what's happening over here in the 15-second time frame. It's not doing anything faster. It's just the measurement, the measurement medium, okay, the reference point that we're measuring the high and high. Sorry, the highest high and the lowest low, where it started, where it ended for this interval of 15 seconds. You're just seeing a greater range by comparison with the same time frame. Over here, you can see it hasn't done very much at all. Over here, this looks like it's doing a whole lot more when it's done no different from the high of this candlestick to its low. That's what all that little range right there is the same thing that's been encapsulated by that 1 minute time frame. So it's not a matter of speed. It's not a matter of be fearful because it's too fast. Now, I will agree, it's very difficult for me to outline and talk about something as it hits the 15-second time frame because I want to be able to say, okay, watch this fair value gap. Now we want to see it trade down into the up if it's bullish. We want to see it trade down into the upper half of it, keep the bodies out of the lower half, and then strongly rip higher off of that. That's the what I'm trying to accomplish. So hopefully by spending time with me, you know that that's what we'd be looking for anyway. So eventually what will happen is when I show you a chart and I have an annotation on it, you'll know based on how I teach these specific concepts, what I'm looking for. And I don't need to sit down and tell you every detail about what every individual candlestick's going to do. It's for you to watch it and kind of like narrate it yourself. And it's good if you can sit down in front of price action and record yourself talking it out. Like that's the next order of business for you. If you've been tape reading and if you record your screens and you go back and you watch it later on, because if you're working or something's preventing you from being in front of the charts real time, if that is happening by recording your charts, like have it set up something like this, okay? Where you have a little low time frame, 15-second time frame, and a 1 minute time frame. Obviously, it'll be a clean chart. You won't have the benefit of annotation, but you can screenshot it as you go and then do your annotations as it's a little bit more work. It is, admittedly. But the next bit of business would be when you can do it and watch price action live, record yourself narrating what you believe price should and should not do. Like like you're teaching someone. You're not trying to teach anybody, but you're recording your observations as they happen. So it's an audible journal. You'll have it visually in your chart, but you'll also hear what at that very moment what you're thinking. Speak it out, articulate it, say it out loud. And what you'll have is you'll have a better version of, and it's actually a very efficiently done. It manages time better. So if you ever watch the 1440 series, it's about time management. And this is a nice application and a way for you to manage your time. So that way you don't spend too much time. Because if you have a wife or a spouse or, significant other, and they say you're spending too much time listening to that guy's videos, you're spending too much time in these charts, and they're going to look at what are you getting? What have you gotten for it? Because they're not looking at 18 months from now, then it's realistic for you to start taking money out. And I said that right. You're going to flounder around in the beginning when you start trading with a real account, whether it be funded or not funded yet. You got to get it through the evaluation phase. But if you're trading with live funds, you're going to be scared. No matter how much of the drills you run, you're going to be scared. And you have a lot of things to weigh out, and you have a lot of things to prove if you're in a relationship because they're watching how much time you're investing. You'll watch all the videos on that channel. You'll sit in all these live streams or watch the recordings when you get a chance to do so. And they're going to watch you do that. You know what you're getting by watching it. You feel inspired, you see something, you learn something new, but they aren't getting anything out of it except for absence. They're not seeing you participating in the relationship as much because you're doing this. So, what do you think that's going to do when you start trading? It's going to force you to feel like you have to perform to make them happy versus my model says I don't have to trade right now. And this isn't high probability. These conditions are not high probability. So you're in a tug of war. And if you do some real deep soul searching, this is why journaling is important. You're going to find out that you're wrecking yourself because you love who you're with. And I'm going to say it again because it went right over your head. You're hurting yourself and blowing your accounts because you're trying to impress, inspire, or get the people that you love on the same page as you. So that way they don't bother you. So they don't ask you, show me your efforts right now. Where's the fruit of everything you've been doing? Because they're not going to see it the same way you do. Think about it. Every single time you blow that account, every single time you go on tilt or you get real close to getting to the point where you're funded, and then you can start making potential withdrawals if you do it continuously profitable after that. Chances are someone that you love or trust, you've told them, I only got this much and then I'll be in a funded account. And you told them that because you want them to get off your back. There's your sixth sister running out there. So we took out those highs there. So it took it going below that low. So that volume imbalance didn't support it, but it came down and took the sell side there. Then it rallied up. Then it used this portion here as an inversion fair value gap. And then it ran to it there. And that's how you would annotate your chart. It's not hard, is it? You should feel a great deal of relief that this is all that's required. Some of you don't want to do this stuff because you think you have to do so many extra things. You don't. In the beginning, you're just looking for simple little processes, simple little drills, little laboratory experiments. What would happen if I observe this and I put my focus on and then watch it? You have maybe five or six different things I talked about over price action today, and not all of them are winners. Not all of them pan out exactly as you may have expected or as I outlined. I'm placing you in a first day trying it. This is about realistic for you. Maybe actually better than you probably would have done in your own hands. Don't try to have a report card. When you go to school on your first day, do they give you a report card at the end of the day? All right, here's how you did in your first day, you assholes. You got a lot of work to do. Shape up or ship out, buddy. That's not how they. I mean, if you're going to school like that, Jack, you're in the wrong place. But That's what you're expecting in trading. You're expecting your first day at school to be honor roll, straight A student. And I'm trying to remind you that this is very, very difficult to do in general because you're the obstacle, you're the barrier. But add to it now, we have a highly manipulated market that's literally bullshit every single day. Every single day, it's bullshit. And you have to wade through this stuff or go do something else because this is going to be very challenging. It's going to be very difficult for you to do it. And don't listen to these people sweet talking and say it's easy because it's not. If it was easy before, it sure as hell ain't now. We got so many things coming at us all the time that are meant to disrupt everything. And I talked about this in spaces. We're going to enter a time where trading can be made very difficult. And you're seeing it. The big moves are happening when you're not in front of the charts. Big ranges are being presented to us at the opens on Sundays, huge ranges. Man, that would have been great if it would have traded through all that during electronic or regular trading hours, but they didn't. So all of that stuff weighs on you and you got to endure it. You got to have a participation in it. And if you don't, how are you going to get good? How are you going to measure your progress? And wouldn't it make sense for you to put yourself in conditions that are hard, but you're being honest and forgiving to yourself in the beginning, saying, hey, I really don't expect to do well, but I want to see what happens when I do these drills. I want to see where my present understanding is and then record that and log that. Now you have something that you can measure tomorrow and then on Friday and then going forward. Because what we're doing here today, at least 15 minutes a day. And why am I saying 15 minutes? Because if you're watching 15 1 minute candles over here, you're going to see something in a market structure in the 15-second time frame that's going to yield to you either a market maker sell model or a market maker buy model. It's there all the time, every single time, every single time. 1 hour, you have four 15-minute intervals. That means you have four market maker sell or buy models, not four individual buy side or buy models and or four sell side. It's four of them. It could be any combination of one of the buy model and three to sell, or vice versa. But you're getting generally four of them per hour. Don't take my word for it. Don't take my word for it. Go in there and look at it. So studying price action like that, it'll afford you at least one opportunity to practice in. All you're going to be looking for is a run on liquidity. And you don't need to have the beginning of the move understood. You may see something after the fact. The sell side of the curve delivers on a buy model. Okay, that's this. You have to know what you're looking for, the draw. Where is it drawing to? If you don't know what that is, it doesn't matter what data you put in front of that. The determinist, the target, what are you aiming for? If nothing is the target, you'll have 100% strike rate hitting that. Nothing. You won't know what you're aiming for. So you have to have the work done in the beginning to aim for something. Simple little pools of liquidity on these little time frames like this and use a fair value gap. And you don't even demand that the requirement that your entry is on is profitable or not. It's the fact that you're getting in there and you're watching example after example after example. By repetition, you will retain what hard markets look like and feel like. I don't know how to say it other than that. There's no other way for me to articulate it except for because you've been watching price action and you've placed yourself in scenarios where you're looking for an outcome that's measurable. It's finite, it's specific. You're entering, you have a stop loss, you have a target, and you keep conditioning yourself to go in and you're desensitizing yourself that you're not afraid to go in. If you see the fair value gap, you're entering it. And over time, because you've done lots of them, your subconscious is going to retain the times that it worked very, very well because you've seen it lots of times, lots of repetitions. If somebody that you've never met walks in front of you in the next 30 minutes, if you're not looking for them and someone offered you $1 million, tell me what the guy had on as a shirt. What color was his shirt? He had brown pants on, but he had a specific color shirt. I'll pay you $1 million if you tell me what color that was. It's impossible. You're never going to do that. And that's what some of you, most of you, are doing. You're complaining and saying, this is too complicated. I want it easy. I want it perfect. I want it to always make money for me. I want something to tell me to get in and when to get out. I want my stop loss to be small all the time. That's like you knowing what this person was wearing over the last 30 minutes. They walked in front of you. You saw them, but it wasn't meaningful to you. So you didn't retain any of that information. Do you think you would have been more equipped to be able to tell me what the color of that person's shirt was if I told you there's going to be a man that's going to walk in front of you over the next 30 minutes? He's going to be wearing brown slacks. I want you to tell me what color his shirt is. You're going to do a better job at that. Why? Because now you're interested. Your reticular activating system is now keyed up. There's a reward there. You're aiming for it. You've placed your focus inside of 30 minutes. So now you're going to be looking for it. Why? Because something's been given to you to key up on, to focus on. That's what you're doing when you do these drills. You're looking for things by repetition and by placing yourself in that situation where it can materialize and manifest itself in front of you. Using the same scenario, if I were to show you 20 different pictures of this person, backside from a bird's eye view, worm's eye view looking up to him, you have all different angles now. How successful do you think you would be if I said now in the next 30 minutes this person's going to walk by, he's wearing brown slacks just like it is in that picture. You have different angles of the same person. The person's your model. The person of interest is that model. How successful do you think you would be looking for this person to come into your view in the next 30 minutes and then being able to tell me what color their shirt is? 100% strike rate then. Or you just were not paying attention. And that's user error. And that's exactly why my stuff fails in some people's hands too. Now think about that. I like this analogy. It just came to me. Thank you, Father, for that. But it makes perfect sense. If someone told me that, I'm like, oh yeah, that makes sense. I didn't ever look at it that way. But that's exactly what we do as traders in the beginning. We think we know everything or enough to get out here and try to do something. But you got to get out here and get your hands dirty. You got to roll your sleeves up and feel what it feels like. Get those pictures, those snapshots of your model from different angles and see what it looks like. Sometimes those pictures might be not not all that information. There isn't that much information in them, let's say it that way. But the details are supported with the overall view, like a hologram. You can take some parts of the source material that creates a hologram image, you can take some of that away and you'll still see the image. It'll be distortion in there. It won't be as crystal clear or pristine, laser crisp like 4K, but you can still make out what it is. It's kind of like, the same thing here. Are you getting multiple angles in utilization of these ideas in real-time price action? You're forcing yourself to develop a holographic perspective of price action with a model that makes sense to you. We're not looking at commitment traders. We're not looking at breakers right now. We're not looking at all these other things that I've taught. We're just looking at simple little things for entry to a pool of liquidity, some old high, some old low, and participating in it a lot, forcing yourself to get in there a lot. Now, on easier, cleaner price action days, you're going to have a whole lot more setups, a whole lot more participation. I'm hoping we have that tomorrow or for Friday, and you'll see me do a whole lot more of them. But today, I wanted you to feel what it felt like to be a little bit uncomfortable. Some of you want to feel like you want to go out and defend me because there are going to be people that say, "Look what he did today. He doesn't know how to trade." Take that bait. Take it, please. Would you like me to spoon feed it for you? And we wipe the corners of your mouth? Oh, man. Trust me when I tell you this. You doing what I showed here today will be so much more impactful and beneficial for you if you just submit to doing it. And the things that you don't understand as a benefit from doing it, you will see it happen. Your understanding will grow, your visibility in reading, interpreting price action will grow. It'll increase exponentially. And there's no shortcut around that. You can't purchase a 5-minute trainer version of it. You can't buy somebody else's experience and then download it to yourself. But everybody else marketing and selling shit, that's exactly what they're doing. They're letting you believe if you pay them, they're going to shorten the learning curve for you. And they're not going to do that. And that's why if you watch more and more of them, and a lot of them are my students, they're getting real uncomfortable because I'm saying stop paying everybody. And it's getting real hard to be team ICT if you're selling my shit. But if you're worth your salt, if you're good about what you're doing, you'll still have an audience. Someone will still want to pay you regardless of what I'm saying. They like you. They resonate with you. And there's nothing wrong with that. But a lot of you folks out there that are selling my shit don't deserve it. You don't deserve that. You didn't earn it just because you can make a little bit of money. You did not deserve, and you don't deserve the position of teaching it because you don't know everything. You only know what you've experienced in your own hands, and that's limited. That's very limited. But I get it. Times are hard, things are expensive, and you got things to take care of, and it is what it is. I got you. But start paying attention. You're going to start seeing more and more of my students start trying to distance themselves because I'm making it difficult for them because their audience is my audience. Their students are my students. They're just getting paid a commission to hold their attention. I'm doing it for free. None of these people, none of my students will shorten your learning curve. They're not going to do that for you. Even if they sit out here and they trade in front of you every single day, that's not you learning. That's you learning codependence. And that's why I don't do that. At some point, the Lord may say, hey, look, you're done. You did enough. It's time to come home. And I'm just not going to be here one day. My channel will be quiet. My ex will be quiet. Maybe one of my kids will come forward and say, hey, just let you know, ICT's went on to go to be with the Lord. That's it. Nothing, no day is promised. Tomorrow's not promised to me. It's not promised to you. So if I sat out here every single day and put you in every one of the best case scenarios, the only thing you would do is worship me, which is what I don't want. You would be over the heel. It would really create a cult, and you wouldn't try so hard to do it. You'd be like, I'm just going to show up when he does his streams, and I'm going to copy him. Life is good. That's not what I set out to do. I'm out here teaching you. This is how you get it. You roll your sleeves up. You get uncomfortable in the beginning, and be comfortable being uncomfortable. And it doesn't sound like that's possible, but it's the truth. Uncertainty is what you have to embrace as a trader. You don't know what that trade's going to do for you. It may stop you out. It may give you the best exit you've ever had. You don't know. More now than ever, I don't know. I know what I'm looking for. I'll participate when all the things I'm looking for are there. But you don't need all things in your favor when you're doing drills. You're desensitizing yourself to getting in. Watch something, observe something, take the information, take the experience from it, and log it. Do not look at failed runs in price action when we're doing drills like this. Don't look at that as failure in your ability or the model or the concept. That's not what this is. And it's a very hard thing to bridge because everybody is so impatient and they're frustrated. So they'll say, oh, it's bullshit. It doesn't work. When you're missing the whole point. No matter what you trade, no matter what tool you use, no matter what software program you buy, there's a learning curve. It doesn't put you in the winner's seat just because you paid for something. You still will wreck it, period. Okay, it's going to happen. So isn't it isn't it worthwhile for you to know what you're going to do to mess yourself up? Nobody else is going to know that. So if you feel uncomfortable me asking that, you're looking around the room thinking, "Shit, he's pegged me. He just cornered me right now," because that's what I'm afraid of. I'm afraid that I'm going to find there's character flaws in me, and I'm trying to work so hard to pretend they're not there. Resetting my funded accounts constantly, resetting my demo account constantly, erasing all the things that are showing me I have work to do. When I'm telling you as the teacher, don't hide from that. You want to know what those things are. You want to know where those imperfections are so that way you can correct it. Or characteristics in the beginning, when you haven't adopted bad habits, they're easily corrected. It's harder the more time you spend doing dumb stuff. Dumb stuff is trying to trade before you know what you're doing. Getting out here and dabbling, jumping from one mentor to the next, one model to the next, one PD array to the next, one system, no, one software program. This person's selling this one's selling that. You're so uncomfortable, you're willing to pay out of pocket to remove that pain and replace it with success. And you can't buy success. You can't pay for it. Trust me, you can't. So, anyway, I'll leave you with a few things here. This run right there, look for price to try to gravitate back into that. We have all these layered sell side liquidity, and then we have this buy side and balance sell side efficiency. So just observe that consequent encouragement. And if it can get below that, it may want to revisit this during the lunch hours. And I will be with you again today, Lord willing, in the afternoon, and we'll be back at another drill live session tomorrow at 9:25. Until I talk to you then, be safe.